Actually, we're going to revise that estimate in a upcoming report. I think it's too low. Silver has already entered an acceleration phase in its trend. And similar events, technical events like that, and they could be defined, occurred back in 79 on the way to the 1980 high, and also in 2010 on the way to the 2011 high.
What if I told you that the $50 silver price everyone's been waiting for is not the top, but just the beginning? Legendary market technician Michael Oliver has just ripped up his old prediction and warned that silver is already in an acceleration phase that could shock the entire financial world. He says the $50 ceiling that's held for over 40 years is about to be shattered, and fast. In today's video, we're diving deep into why Oliver now believes silver could surge past $100 as soon as Q1 next year, why this time is fundamentally different from 1980 or 2011, and why waiting on the sidelines could mean missing the biggest move of our lifetimes.
Now, both of those highs were roughly around $50. So everybody in the world knows, oh, silver's hit a high twice at 50. And if you just stand back a bit and think about it, gold's way above its 2011 high. Even copper right now, on this pullback in copper, is still trading above its 2011 high. Metals, like I think I looked at a zinc chart the other day, or was it 10? I forgot. Above its 2011 high. And silver, I guess, is just going to stay below the 1980 high and 2011 high forever. It's a dog. Okay, right. Or something's wrong. Something is wrong with the pricing of that market. And we all know, if you've been in markets long enough, some markets can get overpriced vastly and stay there, and yet seem so sane. And then when they implode, you say, oh, golly, it was a bubble. Now I understand. That guy was right, The big short guys, remember, they said they were going to collapse. The mortgages finally did collapse. Or a market gets bashed down so low and stays low for so long that people just write it off. Like it's never coming up. It's mired in mud. It's something's wrong with it. Those can be mistakes, market mistakes. And when a market makes a mistake and finally realizes it's made a pricing mistake, not all markets move rationally, remember, okay? It can often compensate even more so getting back to what it should have done already, okay? And if you factor in such fundamentals as the real value of the underlying money unit, in this case, let's say the dollar, same applies to the euro and the yen and so forth, fiat pieces, nothing backing them, they decay in value every decade dramatically in real buying power, because the quantity almost doubles for the dollar, for example, every decade, almost by 90% increase in the supply of dollars. So, like I've probably said this before, when your granddad built a house, it was $4,500 medium home price. Now it's $450,000. Okay, get the point? Okay. Another way to express it is quarter of a century years ago, same month, September 2000, if you bought the S&P, you're up 3.5-fold right now, okay? If you bought gold, you're up over 11-fold or 12-fold by now. It's held its value and stayed ahead of the decaying money unit that we use to measure things. Whereas some things have just barely kept up with it, like the stock market. Even though they look good on the price chart, it really isn't keeping up with the real value of the underlying unit. Well, silver was $50 in 1980. You want to try to compensate for that, for the real decay in the value of the money in it? Would probably be $200, $300 just to match that price in real dollar terms. Now, forget that. That's not a technical, that's just a fact. Silver's been vastly underpriced relative to gold, underpriced versus other metals for too long, and it's waking up. And when it wakes up, it's likely to have a tantrum. And the tantrum has only begun. We thought, based on one or two factors that I could identify, that maybe we'll find some profit-taking resistance in the 60-70 zone after we burst through the 50, run all the buy stops, the latecomers. Frankly, looking at more soberly and looking back in time, measuring this type of move, it wouldn't shock us that silver's in excess of $100 sometime in the first quarter. Okay. And getting there will be obviously rapid. We're in one of those phases now where silver's not only going to catch up to reality, catch up to what some base metals have done, catch up to gold. It's going to beat gold. It's already been beating gold this year. In fact, silver's up double digits more than gold's up year to date. Much of that occurring since April. Gold went into this, sideways, silver went vertical. Anyway, I think we're in an interesting time. Fundamental guy I appreciate very much, Eric Sprott, might call him the king of silver right now. He thinks go to a couple $100 an ounce. And I see no argument against that, frankly, ultimately. I'm just talking in the next couple months. I think, seeing 100 wouldn't shock me. And frankly, once you get into white knuckle flights like that, where a market has made an error for decades, and then somebody says, I'm out of here, it's very hard to make accurate technical predictions. We come up with that plus 100 level simply by replicating certain other phases in those prior bull markets on a ratio scale. But silver's vastly undervalued, as we've said, relative to gold, relative to copper, relative to the commodity complex. It's been mistreated, and that's a major error. There's no fundamental reason for it to have been mistreated. Its supply-demand situation is tight. It's remained tight. There's no excess in terms of supply. Supply is barely matching the increasing demand. And one of the unique things about silver on a fundamental basis, and I try not to get into it too much because we're technically based, but much of silver comes out of the ground not from miners that are motivated by the price of silver. They're producing zinc or copper or something else, and silver is a peripheral product. So even if silver went ballistic, it's not a primary motivator for them to pump out more copper and zinc so they can get hold of that silver. You get the point. So most markets, if you take the price of grain up, the wheat farmers are going to make more wheat, or copper, mine more copper. But silver is a unique position where, the silver miners are narrowly focused. They will benefit directly, but they don't produce the bulk of the silver production. Comes from copper mines, zinc mines, etc. And so silver's got a real unique fundamental argument going for it as well. I'm not sure of that. I know they could because technically we ran a spread chart, meaning divided the price of SIL, the popular silver miners ETF, against the price of an ounce of silver. And when you express that as a percent, you get a chart, okay? And it has technical attributes to it that suggests that you're pressing toward a breakout level right now, meaning a breakout in performance of the miners versus gold. And in contrast, for example, SIL right now is still $20 or so short of its 2011 price high, which was like $90 plus, okay? GDX, the gold mining ETF, is above its 2011 high, just like gold is, and yet the silver miners, just like silver, are below their 2011 high, and we can see the catch-up occurring quickly. And also silver miners are at a point of breakout in performance, I'm talking about, versus the gold miners. So we're emphasizing silver. We think that it will outperform gold, and we think the silver miners will outperform the gold miners. And the question you're asking, will the silver miners beat silver? It's possible for a while. I don't think it's a big issue. I think the main emphasis that investors in the monetary mining sector should look at is emphasizing silver side of that equation. Just like in the bullion area, I'd emphasize silver. I think the percent gains you'll see there will handily beat gold over the next couple quarters. Yeah, I've shown before logarithmic scaled or ratio scale charts, but what you've got there are price-based or arithmetic scale. But in each case, over different durations of time, you had a bull trend that was an 8-fold move from the prior bear low to the bull market peak, which also ended in drama, by the way. The final 6 months was vertical. Right now, we're not even 4-fold. Our bear low was below 1,050, bear low in 2015, late 2015. It's been 10 years, and we're only now approaching what you could call a 4-fold move. Over 4,000 would do that. those moves, if we match those moves in percent scale, gold would be like $8,500 just to match those highs. It did twice before under circumstances that are far less fundamentally gravitational as the one we're in now in terms of causing gold to go up, especially when the stock market starts to break and panics the central bank even more than it's ever been panicked, not just ours, but others. Gold will go, at least there. And I think silver will vastly outpace it, as I've said. But that's just getting back to what it's done twice before. So people who are saying, they're looking just at what's happened in the last 10 years, especially the last year. It looks vertical. But when you look at those other charts, the game is we're not even halfway there. And we have yet to go vertical in a way that is really comparable to what those did. So I would tell those people, and I saw one of those headlines this morning, some major bank said the same thing. Oh, golly, it's looking like, the verticality is overdone, et cetera, et cetera. You haven't seen the beginning of it yet.
Michael Oliver starts by pointing out something crucial. Silver isn't just inching higher anymore. It has already entered an acceleration phase. He compares today's technical picture to the explosive run-ups of 1979 to 1980 and 2010 to 2011 when silver went vertical to $50. But unlike gold, copper, and even zinc, all of which trade well above their 2011 highs, silver is still sitting below its old peaks. According to Oliver, this is a market mistake, and when markets finally realize they've priced something wrong for decades, the correction is not slow or gentle, it's violent. He highlights that if you adjust silver's 1980 price for today's dollar, it would already be worth $200 to $300 an ounce just to keep pace with inflation and currency debasement. That means $50 silver is no milestone. It's simply catch-up. And with silver already outperforming gold this year, much of its gains coming since April, Oliver believes we are entering a white-knuckle period where silver not only catches up to gold, but actually outperforms it. Fundamentally, silver's supply situation is incredibly tight. Most silver doesn't come from primary silver mines, but as a byproduct of copper and zinc production, meaning higher prices won't suddenly flood the market with new supply. This is why Oliver calls silver's undervaluation a massive error, one that the market will overcompensate for when it wakes up. And it's not just bullion investors who will benefit. Silver miners are still trading well below their 2011 highs, even as gold miners have surpassed theirs. Oliver's analysis shows that silver mining stocks are on the verge of a breakout that could see them outperform both gold miners and silver itself. Finally, he warns that the stock market is in a historic bubble, fueled by years of cheap money. If that bubble breaks, and Oliver thinks we're close, we could see a flood of capital into gold and silver. Add in the risk of a Bitcoin breakdown dragging tech stocks lower, and you have the perfect storm for a parabolic move in silver. In Oliver's words, $50 silver is a joke, and $100 plus in the next few months wouldn't shock him at all.
Well, reanalyzing closely the development of that upward process in the late 70s to the 1980 peak, and then also in the bull market that had been going on for a decade in silver up to 2010, and then suddenly it said, that's it, I've had enough. It went straight off the page. It did it in what happened in both those markets, and this is true with other markets as well. It's not just looking back at silver. But when you go into acceleration phases in markets, what you see in the final couple of quarters, and I don't mean that we're going to top at that point. I'm just saying right now, the next couple of quarters is so dramatic that it drops your jaw. And it's not uncommon. In other words, when you get into these phases, and that is fairly uncommon, but it's not uncommon that when you get in those phases, you do what I'm talking about. And in terms of multiple gains, it's merely replicating and getting back to even somewhere near the real dollar value that it has saw in 2011 or certainly 1980. And also, like I said, certain other base metals and gold is well above its 2011. Why is silver the dog? Is it really a dog or is it a mistake? And I'm arguing this is one of these market mistakes that we see. And when they get exploited, they're worth exploiting. Undervalued, huge buy. Overvalued, huge short. And That's what I think silver's in right now, and I think it's going to compensate for it. But it's not going to do it in a way that is leisurely. Where, I'll have to think about this. Don't think too long. It's already said I'm accelerating. And I think the $50 high is a joke right now. That could come out in 48 hours or the next 2-3 weeks or whatever. But in the next handful of months, I think the move up in silver will be so dramatic that they'll be jaw dropping. To restate what we've said before, the stock market is a major bubble in history of U.S. stock markets. No other bull market has had this kind of multiples over this period of time, and it is largely due to, look at an M2 chart, you'll see the growth is parabolic, and it's simply keeping up with the decay in the money unit. But and for 15 years, we've had free money 10 of those 15 years. And even when they raise rates to 5%, I'm talking the short end of the market now, and you go back 75 years and look at a Fed funds rate chart, even that 5% is in the lower quadrant of the past 75 years of rates. So we've had, in effect, what I call a Cheech and Chong rally, high on drugs the whole way. And a lot of that money flow went into the stock market to an excess. When those bubbles break, they're horrendous, because errors are exposed, and you don't need a new headline to take it down, like a war in Europe or something like that. It will go on its own because it is done something excessive, just like we've been talking about regarding silver. It's done something that's excessive and prolonged, and when it makes up for it, it's dramatic. I think the stock market, by the way, right now, when we look at its metrics in the weekend report, we had I think it was a 100-day moving average oscillator. And it has structure that we're about to challenge right now as you and I are talking. About another 0.5% below where we are. You're going to trigger a structure that you cannot see it on the price chart, but you can clearly see it on the momentum chart. It's a floor that's been used like 4 times on momentum since July, whereas on price you have this upward incremental crawl ever since we got above the January, February highs in the S&P, which is like 6140. Everything since then has been like 0.25%, 0.5% week, et cetera. Incremental, yet new highs. But during that time, momentum has built a floor that says, you break me, I'm going to take you down. Now, the problem is if you're long the stock market, we're arguing we've been in a developmental top process since late last year. Yes, new highs that occurred in 2000, mid-2000, after we predicted a high in January. It occurred in October of 2007 after we'd predicted high occurring at a certain target zone. That was a Fed rate cut that helped cause that high, just like we just had. You don't want to get back below the prior high. Well, for the S&P, that's 61 plus. Right now, we're pushing towards 6,600. Well, we're talking, not a lot of percentage points. So if you get an intermediate term break in the stock market, everybody says, that's fine. You don't want to get back below that January, February high, because if it does, then you're saying, oops, that wasn't the breakout I thought it was. It's a failed launch. That's when you get into the deeper stuff. And I think that's likely to occur. And when it does, it will have wave effects. Well, first off, Bitcoin, 10 years ago, this wouldn't have mattered, even if Bitcoin had a sharp break. And it had some big collapses, since it started trading futures in, was that 2017, I think it was. They didn't matter because it was off to its side. Now Bitcoin, remember, it's 57, I think, percent of the overall crypto market. So it's the king. Okay, even Ethereum, everybody likes to look at, is only 13% of capital weighting of that arena. But Bitcoin's become entrenched now financially. So a lot of companies have been involved in that thing. And therefore, if it breaks down in a surprising way, they're going to get ambushed financially because they're hip deep in it. And that was not true 5-6 years ago. So it didn't matter then. Now it matters. And when you overlay a chart, it's a simple technical tool. Get a monthly chart of the NASDAQ 100 to go back to the 2021 high. NASDAQ 100 made a high in November 2021 and then dropped to 2022. Bitcoin peaked in November 2021 and dropped into late 2022, just like NASDAQ. Then they both went up together almost month by month. If Bitcoin breaks, don't be shocked if NASDAQ 100, it follows hand in hand. Not necessarily as sharply, because Bitcoin has a momentum trend structure below it, not evident on the price chart, that is identical to the 1987 S&P chart, momentum chart, before it crashed. And I'm arguing that Bitcoin, right now trading at 112,000, a recent traded low was in the 107,000s. You get back down to that 107, actually about 109,000 next week. You start breaking one of our big structures, and you get down to 101,000, it's over. You could get an implosion. That would ambush investors. And I don't mean just Bitcoin investors, but it would have a wave effect on the stock market because of the linkages now.
So here's the big question. Are you ready for $100 silver? Or will you be one of those investors who realize too late that the move has already gone vertical? Michael Oliver is clear. Silver has been mispriced for decades. And when the market corrects, it doesn't do it slowly. It does it explosively. If you found this video valuable, hit that like button, subscribe to the channel, and turn on notifications so you don't miss our next update. And drop a comment below. Do you think silver can really hit $100 by the first quarter? Or is this rally going to stall at $60 or $70? Let's see what the community thinks.